Hello, dear friends. Welcome to another session of bookkeeping and accountancy, not for profit concern. In this session, I'm going to solve one question based on final accounts of school. Question number 11. Let us read the question first. From the following balance sheet and receipt and payment account of New English School, Barsi, prepare income and expenditure account for the year ending 31st March 2020 and the balance sheet as on that date. This is the balance sheet of previous year. We can say it is the opening balance sheet as on 1st of April 2019, and our year ends on 31st of March 2020. So for us, this is the opening balance sheet. Capital fund, cash in hand, cash at bank, building, furniture, library books, and company computer laboratory given in the question. This capital fund we will transfer to the next year, that is to the current year's balance sheet as on 31st of March 2020. Cash in hand, we will ignore this part because this opening cash balance and opening bank balance is already recorded to receipt and payment account, already recorded to this account. And throughout the year, there are various receipts and various payments. So there is change in the closing balance. So at the end of the year, the closing cash balance is 4,800 and closing bank balance is 70,000. So it will appear in the new balance sheet. We are going to record the closing balances of cash as well as bank to the closing balance sheet and not the opening balances. So this part we are going to ignore. Opening cash balance as well as closing cash balance, no need to record. Then building, being fixed asset, we will transfer to the next year's balance sheet asset side. Same furniture, we will transfer to the next year's balance sheet, library books also, and computer laboratory also. If you observe in this question, furniture is again purchased of rupees 50,000. So we will add 50,000 to the existing furniture of rupees 72,000. Similarly, library books, opening balance is given 45,000, in which we will add additional purchase of library books rupees 14,000. Next, throughout the year, let us have a look at the receipts. Opening cash balance and opening bank balance, ignore this part as it is already recorded to the opening balance sheet. Tuition fees received. Income side, term fees received, income, admission fees received. Income side, donation, capital, it is to be capitalized, so we'll add it to the capital fund. Interest received, income, government grant, revenue, income, sundry receipts, income. Now payment side, salary, payment side, expenditure, library books, purchase of asset. So it will go to balance sheet asset side. We will add to the existing library books. We will put one tick to library books. Office rent, expenditure, printing and stationery, expenditure, sundry expenses, expenditure, insurance, expenditure, sport expenses, expenditure, annual gathering expenses, expenditure, furniture, asset. We will add to the existing furniture, opening furniture of rupees 70,000, put a tick to furniture. Repairs, expenditure, and closing cash and bank balance, we will record to the closing balance sheet. Opening cash and bank balance, opening balance sheet. Closing cash and bank balance, we will record to closing balance sheet. Adjustments, outstanding salaries rupees 9,000, put a tick to salaries. Next, outstanding tuition fees, rupees 15,000. Put a tick to tuition fees. Depreciate library books and furniture. Tick to library books and furniture. So in all, there are two ticks to furniture and two ticks to library books. One tick for additional purchase of furniture and another tick for depreciation. Same applies to library books. After reading the question carefully and all the adjustments, it's time now to record all old balance sheet items to new balance sheet and receipt and payment items to income and expenditure account as well as to the new balance sheet. First item is capital fund, balance sheet liability side. We will record to balance sheet liability side as capital fund amount rupees 6,43,000. We will record it to the inner column so that we can add surplus or we can deduct deficit out of it, and the net amount we will be recording to the outer column. Let us move ahead to the asset side. Cash, opening cash, it is recorded in the opening in the receipt and payment account as opening balance. So opening cash will remain only in the opening balance sheet. Opening bank also will remain only in the opening balance sheet. We are supposed to record the closing cash and bank balance to closing balance sheet. So ignore this opening cash in hand and opening bank balance. Next item is building. Asset side we will record as building. Amount is rupees 4,50,000 inner column, and we will leave 3 lines for adjustment. Next item, furniture. Amount is 72,000. Again, 3 lines for adjustment. One for additions made to the furniture and another one for depreciation and one for subtotaling. Next item, library books. Amount is 45,000. As there is no adjustment on building, we will record building straight away to the outer column, and there is no need to leave any line for the adjustment. Next item is computer laboratory. Amount is 60,000. Now receipt and payment account. Opening cash, opening bank, ignore. Tuition fees, income side. By tuition fees, amount rupees 90,000. Leave 1 line for adjustment and record it to the inner column only. Next item, term fees, income by term fees, amount rupees 3,000. No adjustment, so straight away to the outer column. Next item, admission fees, amount rupees 12,000. Donation is to be capitalized, so we will add it to donation or capital fund. Add donation, amount rupees 61,000. Next item, interest received income rupees 2,000 by interest received rupees 2,000. Government grant revenue income by government grant income. rupees 1,20,000 and sundry receipts by sundry receipts amount rupees 11,000. Now payment sides, salary expenditure, two salaries amount rupees 90,000. As there is adjustment on salaries, we will record it to the inner column and we will leave one line for adjustment purpose. Next, library books. It is the addition made to the library books. We will add it to the existing library books. Add, addition or purchase amount rupees 14,000. Total is now rupees 59,000. Next item, office rent expenditure side, to office rent amount rupees 10,000. Printing and stationery expenditure, to printing and stationery amount rupees 22,000. Sundry expenses, to sundry expenses amount rupees 12,000. Next item is insurance expenditure side, to insurance amount rupees 10,200. Sports expenses, to sports expenses rupees 8,000. Annual gathering expenses expenditure side, to annual gathering expenses amount rupees 9,000. Furniture, this is addition made to the furniture. We will add to the existing furniture. Balance sheet, asset side, furniture, add, purchase or addition made amount rupees 50,000. So total furniture is now of rupees 1,22,000. Next, repairs expenditure side, to repairs amount rupees 15,000. And closing cash balance, we'll go to balance sheet, asset side, cash in hand 4,800 and cash at bank also will appear in balance sheet asset side, 70,000. Total is now 74,800. Now the adjustment part, outstanding salary rupees 9,000. Let us add it to the expenditure, that is the salary. Add outstanding rupees 9,000. Total salary for the year is rupees 99,000. Second effect, we will record to balance sheet liability side. Outstanding salaries rupees 9,000. Next adjustment is outstanding tuition fees. We will add to tuition fees rupees 15,000. Add outstanding rupees 15,000. Total tuition fees for the year is rupees 1,05,000. outstanding income. Second effect we will record to balance sheet asset side. Outstanding tuition fees amount rupees 15,000. Next item, depreciate library books by rupees 9,000. Deduct from library books less depreciation rupees 9,000. Net value of library books is now rupees 50,000. Second effect of depreciation we will record to expenditure side. To depreciation on library books rupees 9,000. And depreciation on furniture rupees 10,000. Less depreciation rupees 10,000. Net value of furniture is now rupees 1,12,000. Second effect of depreciation will go to expenditure side. Depreciation on furniture, it's 10,000. Total depreciation is 19,000. Next, finish. Let us calculate whether the business on surplus or in deficit. Credit side total is 2,53,000 and debit side total is 2,04,200. So there is credit balance of income and expenditure account. So there is surplus 2,53,000 and the surplus is rupees 48,800. In the question, in the textbook, the surplus is 48,000. Make correction over there. It should be 48,800. Make correction over here. It should be 48,800. So by surplus transferred to capital fund rupees 48,800. We will add it to the capital fund. Add surplus 48,800. Subtotal is 7,04,800. Add surplus of rupees 48,000. So the closing capital is 7,52,800. Again, in the question, the balance total is given 7,61,800, which is our total. Let us check the asset side total. Asset side total is also 7,61,800. This is correctly recorded in the textbook. You have to make correction over here. It should be 48,800.